Hello, everyone. My name is Jeffrey Kennedy, and welcome back to another episode of Market Academy. Now, as you know, the last few weeks we've been kind of doing more of an in-depth dive into the wave principle, and that's what we're going to continue with this week. Now, recently, what we've spent some time discussing the intricacies of impulse wave development and also, too, the diagonal pattern. Well, this week and then next week and then the following week, as we trade into, or as we move into January, we're going to be looking at the zigzag, this formation, the flat correction, and then also too, the contracting triangle. So this week, we're going to focus on the zigzag. Okay, so what exactly is a zigzag? Well, a zigzag is one of three types of primary corrective structures. The other two, of course, being the flat correction and the contracting triangle. And as you can see here up in the upper left-hand corner, in parenthesis, I have this small little funny kind of notation, 535. What does that exactly mean? Well, this 535 notation is a kind of a quick-hand notation that Ellioticians use to identify the substructure of these primary Elliott wave foundational patterns. For example, if we look at the impulse wave, the notation that we would sometimes use to identify an impulse wave would be 53535. And then the diagonal, we would use 33333. And again, going back to the zigzag, we would utilize a 535 notation. And what this simply means is that wave A is going to subdivide into 5 waves, an impulse wave. And then you have a 3-wave move for wave B. Now that 3-wave move for wave B could actually be a zigzag. It could be a flat. It could be a contracting triangle, by the way. We'll talk a little bit more about that on, say, Thursday of this week. Or it could be a complex correction, a WXY. Again, we'll talk a little bit more about that on Thursday. And then we have the 5-wave decline for wave C. Now, remember from last week's lessons, we learned a little bit about where an ending diagonal may actually occur. As a terminating wave pattern, an ending diagonal can only occur in the 5th wave position of an impulse wave or as wave C of either a zigzag or flat. So in this instance here, we can have wave C unfold either as just a straight up impulsive decline, 5-wave move, or it could take the shape of an ending diagonal. Either way works. Okay. Now, next, I'd like to actually talk about, say, this corrective price channel, the trend lines I draw around some of these Elliott wave patterns that we work with. And of course, in future episodes of Market Academy, I'm going to be presenting my work on the Kennedy channeling technique, KCT. This is a technique I developed, 20, 25 years ago. I continue to use it to this day. Because it's a very simple trend line algorithm that I use to help me distinguish between motive wave structure, motive wave patterns, and also two corrective structures or corrective wave patterns. Now, the whole cornerstone idea behind the Kennedy channeling technique is that counter trend price action tends to be contained by parallel lines. And I call that channel a corrective price channel. So when you're working a zigzag, the way you actually draw that corrective price channel is you start at the origin point of wave A, come down, then take a line from the origin of wave A to the extreme of wave B, and simply drop a parallel line of that trend line down to the extreme of wave A. And what that does is it highlights support for the extreme of wave C. And as long as this movement down is contained by parallel lines, odds are it's going to be a counter trend move and that it will indeed be more than fully retraced. Now, I have observed on occasion, sometimes instead of a bottom line reversal, which is the diagram to the left, what you'll sometimes encounter is a center line reversal. So I like to put that center line in my corrective price channel because sometimes we actually terminate again at or near that center line. Now, another, say, nuance that's kind of not in the book, the Elliott Wave Principle book written by A.J. Frost and Robert Prechter. I think I actually may have mentioned this in my book, The Visual Guide to Elliott Wave Trading, written by Wayne Gorman and myself. It has something to do specifically pertaining to what I refer to as slope analysis. Now, whenever you're working a zigzag, one way that you can kind of, say, bolster confidence in your zigzag assessment is that the slope of wave C is going to be less aggressive than what occurred in wave A. So as you can see here, we have our 5-3-5, 5-wave down in wave A, 3-wave move up in wave B, followed by another 5-wave decline in wave C. So what I like to look for is whenever I'm working a zigzag or what I believe to be a zigzag, of course I want the 5-wave decline to unfold for wave A, and then the 3-wave counter trend move. And then for the wave C decline, of course, we're going to be looking for a 5-wave move down, but we want the slope, the angle of descent of wave C to be less aggressive than what occurred in wave A. And the reason you want that is because if you have a more aggressive decline in wave C, something like this, well, now that decline is beginning to take on third wave or wave 3 characteristics, where if you see something slow and shallow like this is typically what we would want to see in an idealized version, or say as far as the substructure here. Well, that about does it for, say, just my little line diagrams on zigzags. We're going to be looking at some real zigzags in just a moment, but I just want you to know that in tomorrow's episode, Wednesday's episode, we're going to be looking at some of the Fibonacci relationships I tend to encounter within this specific pattern. And then Thursday, we're going to be looking at some variations to the zigzag, predominantly would be starting with, say, the double zigzag and looking at some variations of the double zigzag, and then that's a good segue into the discussion on complex corrective structures. So now let's move on and take a look at some examples of these corrective wave patterns, and we're going to start with some price charts of Apple, because I like Apple, everybody loves Apple, but I found some examples of zigzag patterns in the price chart of Apple. Like, for example, we go back, say, the 2020 timeframe here. Actually, the sell-off that began back in February of 2020 to the downside. Well, notice what you have here. You essentially have down, up, and then down. And then notice, too, the bulk of the pattern was, again, contained by parallel lines. Now, yes, you did see some throw over or throw under in this instance below the lower boundary line of the corrective price channel. But one trick that you can actually do to your price charts to look at the validity of the throw over here, or in this case, again, the throw under, is just pop the chart to a close only price chart. And you can see right on a close only basis, we came down right to that level, right to that trend line, and then reversed, which is pretty much exactly what you want to see here. So this is a good, again, example of a zigzag in a real market, real time, okay? Now, the reason I think that's significant is because I remember when I first started to learn the wave principle, and I just, studied the book, The Wave Principle. Anytime I talk about the book, and I'm using air quotes, I'm referring to the wave principle written by A.J. Frost and Robert Prechter. In my opinion, there's no other treaty, no other better treatise or book or reference material on the wave principle than the work that Robert Prechter has done. But in that book, I remember the first few chapters, chapters 1, 2, and I think maybe even into chapter 3, he uses a lot of line diagrams to explain exactly what these patterns are: impulse waves, diagonals, zigzags, flats, triangles, combinations, and so on. And it's those diagrams which I think are absolutely brilliant, because what they do is they, again, represent the 5 foundational patterns of the wave principle, but they also, too, show you the idealized version of those actual patterns. Now, when I first started learning about the wave principle, I had no problem working with line diagrams, but when I started to transition from line diagrams to a real life price chart, an open, high, low, close price chart of a real market, trading real time, I kind of got a little bit confused and a little bit lost. And it took me a while to kind of, transition that experience from a line diagram to a real-time price chart. So whenever I'm showing examples of the line diagrams or discussing a specific pattern, I also like to combine that with a real-life example. This is what a zigzag looks like in the real world, not just in an academic environment. And pretty much that's a good way to kind of view the line diagrams that I show or offer. That's kind of what you would see in a classroom under, say, in a controlled environment. When you get into the real world, the real markets, that where real money is exchanging hands, sometimes these patterns can be a little bit more challenging to actually identify. Now, this example here is actually that of a double zigzag. Now, we're going to be discussing the double zigzag again on Thursday, but all a double zigzag is, it's two zigzags, a 5-3-5 pattern, 5-3-5, ABC, and then it's joined together by an X wave, okay? And then you have another ABC. Now, what is interesting here is, again, I think it's kind of a cool structure, a cool formation, because it touches on what we discussed last week as far as a leading diagonal. Remember, one of the variations or complexities to the ending diagonal pattern is a leading diagonal. And if you also, too, recall from your lessons, a leading diagonal is also limited to actually where it may occur. It can only occur in the wave A position of a zigzag or the wave 1 position of a developing impulse wave. So here's a good example of a leading diagonal as wave A of a zigzag, waves A, B, and C. And then in the weeks ahead, we're going to be talking about contracting triangles. Well, here we have a zigzag, A, B, C, 5-3-5, but in the wave B position, we actually have the formation of a contracting triangle. That is allowable, okay? That's not a problem. Now, whenever we get into the discussion on flat corrections, wave B of a flat correction can never, ever be a triangle, okay? But a triangle is allowable in the wave B position of a zigzag. So what we have here essentially would be a 5-3-5 for W, and then this is an X wave. And this is interesting too, and again, we'll be discussing this in a little bit more depth Thursday. But whenever you have a double zigzag, WXY, ABC for W, and then the X wave, I've noticed that wave X tends to end at or near the extreme of wave B of the initial ABC decline that represents W. And that's pretty much what we actually saw here back in August of 2022. And then we have the A triangle BC down into below. So this is a good example of a double zigzag. Now here's kind of another fun pattern. Now we're looking at a 120-minute price chart of Apple. And we're just looking at some short-term price action that occurred, say, in July, August, into September and October. And this is the sell-off here that began back in, what was that, July, ending in October, November here, October. But we have a zigzag. Now, this is kind of an interesting zigzag, or it's a complex zigzag, because what you have from the high is you have your 5-wave move down for wave A, then you have your wave B ending over here at this extreme, and then that's followed by another 5-wave decline. Okay, now we're going to be discussing Fibonacci proportion in tomorrow's lesson. So in this case here, what's interesting or exciting to me, because I'm kind of a geek and a nerd when it comes to technical analysis, is whenever you're working a zigzag, the most common relationship we tend to encounter between wave C and wave A of a zigzag is equality. If it's not equality, then it's going to be 1.618. And if it's not 1.618, it's going to be 0.618. So in other words, wave C is going to fall short of the, say, equality measurement between wave A. And that's what actually occurred here. So here's our 5-3-5 pattern to the downside, A, B, and C. Now, what could be potentially confusing is the B wave. Now, the reason the B wave is confusing is because your wave B took the shape of a running flat. We're going to be talking about running flats next week. A running flat is a 3-3-5 pattern where wave C is unable to terminate beyond the wave A extreme. So here's our 3-wave move up for wave A, 3-wave decline for wave B, and then a 5-wave move up. So these waves here, the red wave A and the red wave B, those are also zigzags, 5-3-5 formations. And the reason I like this price chart is because there's no better example I can point to talk about that speaks directly to the fractal nature of the wave principle. These patterns that we work with, those 5 foundational formations, the impulse wave, the diagonal, the zigzag, the flat, and the triangle, they actually build larger and smaller versions of themselves. So this is a really good example of just that idea in action. Now, lastly, what I would like to do is I'd like to kind of do a follow-up on Coinbase Global. We were talking about Coinbase Global back in November. We were somewhere right around, somewhere between 100 and 110. and I had two different wave counts that I was working in Coinbase. This was the operative wave count, and as you can see, the focus was for further rally to the upside, targeting 179.65, and that's because that's where blue wave 3 would equal a 1.618 multiple of blue wave 2. But I didn't want to get everybody, say, overly excited about the upside in Coinbase, so I also offered an alternate wave count. And the alternate wave count still called for higher prices up from that, say, 100, 110 handle, primarily up in this A, B, C advance. We still would have pushed higher to 150, 160. But for this idea to be valid, we needed to keep price action contained within the parallel lines exhibited in the advance that began back in December of 2022. And as you can see, that did not occur. So the odds of this being some type of corrective rally or complex correction is actually quite low. So to go back and update our original idea that the advance in Coinbase was a wave 3 of 3 rally, I wanted to just simply offer some new updated objectives here. So since we've already achieved the initial target of 179.65, the next numbers basically on the docket moving forward would be 206.42. That's where blue wave 3 would equal a 2.0 multiple of its corresponding wave 1, or potentially as high as 248.44. That's where blue wave 3 would equal a 2.618 multiple of its corresponding wave 1. Now remember, whenever we're working this 1-2-1-2 sequence, this is the kind of situation or instance where I certainly would be looking for something beyond a 1.618 multiple, because typically if you're just working a single impulse wave, waves 1, 2, 3, 4, and 5, wave 3 will equal a 1.618 multiple of wave 1 at a minimum. Whenever you start building 1-2-1-2s on top, also 2, notice this is my favorite chart pattern trade setup, the double failure swing low. But whenever you're working a multiple or a series of 1s and 2s, then those higher Fibonacci objectives of 2.0 and 2.618 really deserve to be brought into the discussion. So simply put, everything that we're looking for in coin has transpired quite nicely since November. And as we trade into, say, February, March, I will be looking for additional rally, at least up to a little bit above 200, if not all the way up to 250, before our next significant pause in Coinbase. Well, that's about it for me for today. I'll see you tomorrow. And remember, tomorrow we'll be discussing Fibonacci within the zigzag pattern.
Nó bỏ quá rồi, bỏ vô đi rồi lúc còn gì ra thì nó một tổ đó. Rồi hai tổ ha ba cái này đúng không? Chưa ra chưa có ăn cơm rồi xong cha ăn chưa ăn rồi cái hỏi số qua sai có lại cái đến đây mà năm rồi có không rồi kiếm gì nữa kiếm cái cá ơi dùng cái hộp siêu cho tao đây để cho con vừa của cái cho nó ăn ổ cái phải để ý nha tại vì nó ăn việc nó đầu vừa cũng biết là nhưng mà chuyên luôn không ho á thì phải ví dụ như ho cô phải để ý là ba cái hành luôn á thì phải bị người hay nó tiêu nó dùng cũng nghe cầu thang kìa em tắt cái này